Bitcoin continues to dance at the underbelly of this 117,000 level.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge.
Gareth Soloway shares insights on crypto and Bitcoin, exploring trends and strategies. Let's dive in and discover more together.
This pattern is not a bad pattern. It's not perfect by any stretch, but it's not bad either. And again, for now, I'm going to give it the benefit of the doubt. As long as the markets stay strong, we can make a case that this is a bullish pattern that could be setting up to break out to the upside. All right, now listen, I want to call a spade here, and this goes for the whole entire market. Tomorrow at 2 p.m., we're going to hear from the Fed. They're going to cut rates by 25 basis points. It just is what it is. The key is going to be what they do or what Jerome Powell says. Is he cutting as a Fed chairman, as the Fed, and is hawkishly cutting, or is he dovishly cutting? And the dovish chatter or hawkish chatter is going to be the determining factor if the stock market goes up tomorrow and the next few days, or if it sells off. And my guess is Bitcoin will follow suit. And the idea is, again, Bitcoin still generally trades as a risk asset. So we have to keep that in mind. All right, lastly, folks, as always, I want to go over some questions that I get from you guys. I love that you guys post questions up. First question is, can you review the chart of SoFi? SoFi, sure. And by the way, SoFi is one of these buy now, pay later. And when you see the credit card delinquency rates I showed earlier on, while SoFi and Affirm have done well, this is a warning sign, absolute warning sign, okay? Eventually people stop. Listen, if you buy something and you only have to pay a portion of it, do you think that once you lose your job or once money's hard, are you going to really continue paying for that? No, you're not. And so these companies notoriously, by the way, and I've said this before, I don't know if I've said it to you guys, but I've said it to the traders in the room, when buy now, pay later does its best, it's right before a crash or a collapse in the market. Why? Well, because more people are choosing to do buy now, pay later because they're struggling. And that means these stocks do really well. They have great earnings reports. But once things get too bad, then people stop paying for that buy now, pay later, and then those stocks have a massive collapse because they're on the hook for a lot of those losses.
A long silent Bitcoin whale has suddenly stirred, transferring 1,000 BTC worth about $116 million just before the U.S. Federal Reserve's latest policy decision. The move is striking because the whale had been dormant for 12 years, holding coins originally purchased at just $847 each, worth under $1 million back then, but now valued at a staggering 9 figures. The timing of this transfer, on the eve of the Fed's closely watched FOMC meeting, has traders buzzing about what might come next. The market is already on edge, with nearly everyone expecting an interest rate cut. CME's FedWatch tool shows a 96% chance of a 25 basis point reduction, making this decision one of the most pivotal events of the year. Traders, however, remain cautious. Short positions currently outweigh longs across exchanges, while futures open interest has dropped by billions as traders de-risk. Despite the uncertainty, Binance flows show steady buying, hinting that some investors see opportunity. With Fed cuts looming, volatility is all but guaranteed.
This high pivot right here on the QQQ from February was your previous all-time high, and I'm zooming back or zooming out so you can see. This was your highest peak, even higher than this one, before your Liberation Day sell-off down into early April. And so that becomes what we would call a significant pivot high. It was the highest point on this side. Literally, it was years in the making. And then it would add a subsequent almost 20% sell-off in the S&P before rising and making new all-time highs. So that's one of the reasons why you choose a point like that to draw a trend line. You then take that trend line, connect it to your previous highest point, and lo and behold, We went right up into that yesterday. And remember, I was kind of speculating that that's what we needed to see, right? That was what the market was going to do. It was going to bring the NASDAQ 100 up into this trend line. Then we would see how the markets react. And again, I was just speaking about parallels. And so if we drag the parallel down, was that next level on the parallel, right? You have pivot low, pivot low, pivot low. And then what's so interesting here is look at this. If we drag this further to the downside, look at this. High pivot, low, and low. And this is how you confirm you're right on with a parallel, is you bring it down and look, low, and then it kind of chopped, broke down, came underneath, gapped above, and then it became support right there. And so again, the point being is that generally when you find an accurate parallel on the charts, it should work with multiple points, right? So you have the one parallel you're looking at, but if you bring it up or down, it should coordinate with other major pivot lows. And it's a great way for those of you that are newer to really decide whether or not you found an accurate parallel, right? Because if you drag it up and down and it doesn't have any other pivot points at any other point, then you have to say, okay, is this as significant as I think? Or maybe I need to see if there's a different parallel in here. All right. So again, little tidbits of knowledge that, again, I figured out over long periods of time. But suffice it to say, the QQQ is into this level. We will be opening up slightly on the QQQ today as well. We'll watch and see. Now, this next segment, guys, I was doing some research this morning. I got up really early in the morning. I get up generally between 5 and 6 in the morning. I start scanning the markets. My general routine is to really see what is moving for the day, what's the economic data, what is the levels or what are the levels on the chart.
A surprising twist in U.S. monetary policy could soon shake global markets. President Donald Trump's latest Fed pick, Stephen Miran, has highlighted a long-overlooked third mandate in the Federal Reserve's founding documents. Alongside the well-known goals of price stability and maximum employment, the Fed is also tasked with maintaining moderate long-term interest rates. That forgotten clause can now be used as justification for aggressive policies to push borrowing costs lower. If the Fed leans on this third mandate, it could open the door to yield curve control, expanded quantitative easing, and fresh ways of money printing. Such measures would help the government manage its soaring $37.5 trillion debt and ease pressure on mortgage markets. But the dollar's value could weaken dramatically. For crypto, however, the story looks very different. Analysts argued that suppressing long-term rates amounts to financial repression, fueling demand for alternative stores of value. Bitcoin, already seen as a hedge against inflation, could surge, with some bold predictions placing it as high as $1 million. If you have been watching so far, thank you so much for watching. And do not forget to subscribe to Bitcoinzilla for daily news all for free. That's all for today's video. Until next time.